Good afternoon, traders, and welcome to today's live market analysis on the 16th of February. My name is Jitan Solanki from TradeVest, and it's a pleasure to be here. As always, I'd like to always begin with a fundamental analysis over what's been happening, key developments over the past week, as well as have a look at the seasonal biases and technical analysis of some key charts that we've been looking at over the past week and charts that we're going to continue to look at over the coming week. And as always, I like to spend more time on the charts as well, just to go through some recent trading opportunities and some potential trades for the week ahead. So what's been happening? Well, as most of you like to know, I always like to focus on where we were and what we were talking about last week and really the update in the week ahead. And you'll see there in the light blue that those are the comments that we posted last week, and obviously the darker blue comments are the ones I've just put in today. And last week we talked about the US dollar was continuing to sell off, and really the focus was away from commodities during the past week. And really what we've had now is the focus back onto commodities. Energy seems to be back in everyone's minds. We're trading from each OPEC headline to the next, and we've had some great trades in oil, WTI, and Canadian dollar. Euro. We talked about Euro finally breaking out and running people's stops and looking fairly bullish. And also we talked about how the yen, Japanese yen, would be in focus with potential quantitative easing. And we've had some significant moves in the Japanese yen, and I think that's where there's going to be a lot of opportunities over the next 3 to 6 months. Of course, it's a question whether Abenomics has worked and whether they will continue to pump money into the economy. There's a lot of people suggesting 1,000 pip rally is just around the corner, and it's something we have to keep an eye on, especially if we're holding long-term trades as well, because we don't want to get stuck over the weekend on some potential easing. So yen is definitely in focus and something that I'm going to be looking at aggressively over the next 3 to 6 months. And last week, we talked about how it was a light economic calendar because of the Asian holidays, which is why we experienced some significant moves. Markets can tend to be erratic. Levels don't really hold because there's not a lot of traders around in the Asian sessions. But really this week, the commodities are back in focus, as well as the UK. And what we've seen today is just how important the Brexit headlines will be up until the next referendum on whether the UK should leave the EU. And there's going to be some great opportunities in the British pound in a run up to that. So definitely yen and GBP are ones that I'm going to be focusing on aggressively over the next few months, because that's really where the volatility is most likely to be due to Japan still being able to do some quantitative easing, and obviously the UK in terms of the volatility and whether they will leave the EU or not. So as always, on an intraday basis, we like to kind of run stop losses in the low liquidity environments, and Canadian pairs looked very interesting. And we talked last week about oil potentially basing, and we had a fantastic trade on oil very recently, and they still look interesting as well. There's some great setups on Canadian dollar and the Swiss franc based on the seasonals and fundamentals as well, and the technicals, and I'll show you that in a moment. But of course, we've got to see whether these trends will last or not. And from an end of day basis, we want to be looking at those structural retracements, those ABC retraces, or those 3 or 5 wave retraces. For example, the 5-wave retrace we experienced in the Aussie dollar, something like that is potentially happening in the yen pairs as well. We've retraced in one wave, and there's some key levels in some of the yen pairs where we can potentially get some of those ABC retracements on the daily chart. So last week we talked about there wasn't a major theme happening, and I think we're starting to see some type of theme happening now with the volatility and gold breaking out and euro breaking out and things like that. But nonetheless, after such significant volatility over the past few months, it's going to take a while for overall trends to resume again. Everyone's talking about the central bank currency wars and stock market and things like that, and everything is highly correlated. I think we've put in if we look at the charts and look at all the technicals and some of the indicators of flows and things like that, we've put an intermediary low in the stock market and oil, and we're either going to go higher or just go sideways from here. So that's an important consideration when we're looking at the current currencies as well. There's a significant correlation between obviously dollar yen and the Dow Jones or the S&P, for example. So understanding the correlations is going to be very important to try and ascertain where the movement is over the next few weeks. So before we look at the charts, let's have a quick recap on the key fundamentals that have been happening over the past week. So really, oil and CAD have come back in favor. And as I said before, we're just trading from headline to headline. As soon as the headline comes out that OPEC production is going to be lower to try and limit the oversupply of oil, then obviously we get a movement in dollar CAD, and oil's been rallying on some of those headlines as well. So of course we've got to wait for specific action from the OPEC producing nations, but it's very important to look at the headlines and really understand the volatility when those headlines come out. They presented some good trading opportunities already. Today we had German ZEW, economic sentiment came out better than expected. So it was good news for the euro, but the euro was unfazed by it, to be quite honest. It moved a little bit higher, but it didn't really move that much. Probably from a technical point of view, we've run higher, and I think the reason we ran that high is because a lot of people's stops got hit. So I think we're going to see a bit more of a significant retracement before initiating some long positions on euro from a technical basis. UK PPI input January came in better than expected, and the market did rally on that news, but then it just faded away. So why is that? Well, personally, if we look at what's happening and what is upcoming, markets hate uncertainty, and Brexit, no one's really talking about it right now, purely because there's so much else happening in the shorter term, whereas the referendum is still a long time away. It may be in June, it may actually be longer than that. Okay, so it's not in people's minds just yet, but that's obviously great to know, because you want to start getting into these moves a little bit early on. And really, I think over the next few weeks, we're going to start to see some positioning in pounds according to those headlines. And the initial headlines are the fact that UK will not leave the Eurozone, which is obviously bullish for the British pound. But it's still early days yet. We've still got a lot of uncertainty in the markets, but definitely keep an eye on British pound and their developments over the next month or so. I think the most significant theme that's happened really is with New Zealand dollar. Their inflation expectations have fell to the lowest level since 1994, and it actually sold off on negative news, which is what you want to see. When you have positive news and the market fails to rally, it's not a good sign, right? There's a divergence there. If there's negative news and the market rallies, then again, that's not a good sign. It's going to go with the news announcement. There's a divergence there, and you've got to follow how price reacts towards that news. Whereas on New Zealand dollar, we had negative news announcement and the market sold off probably quite aggressively considering the news announcement, but because of the news announcement, it does leave room for another potential rate cut on the New Zealand dollar. Of course, nothing's a guarantee in the markets, but that's definitely something to be focusing on over the next few weeks and coming months. Okay, so New Zealand dollar significant, and also the British pound and NG and the yen, and I'll be looking at that in that order. So we can start to see a theme starting to develop if we start looking at the headlines a little bit more, but obviously we need the technicals to line up with that, right? Today will be a very interesting day. US was on a president's holiday yesterday, so it'll be interesting to see how the US traders react to events over the weekend and yesterday. It was the first time they get to trade. So that will be interesting and should set the tone for the next week or so. So before we look over the charts, let's have a quick look at the seasonal analysis. So we're in February, and last week I talked about how February, March, April tend to be quite positive for the commodity currencies, Aussie, New Zealand, Canadian dollar, which is what we've experienced quite significantly. We've seen a bit of a commodity rally in energy, and really want to try and match that with strength and weakness in the market. So things like against the British pound, for example, which is relatively weak over the February and March months. And there's been some great opportunities on some of the crosses like pound dollars and pound CAD, for example. And I'll come on to that. And one of the reasons I'm going through this because I want you to all start thinking not just about the technicals, but where is the theme? There's always a technical setup on one of the currency charts, but you've got to start with the top-down approach. You've got to have something else which is going to enable your trade to last longer and go further. So lining up the fundamentals, seasonals, and technicals is a great way to do that. So we can see here British pound tends to be negative February and March. We can see that some of the commodity pairs start to turn positive over the same period. So really, you want to be selling pound against any of the commodity currencies. And if we look at some of the charts here, you can see on pound dollars on the left-hand side, it's a daily chart. So the daily chart on the left and the 4-hour and the 1 hour. So we had some nice moves from the beginning of February. You can see market came up in one wave, came down, went back up again. There's your free wave. Here's your ABC retrace. That's the retrace we try and look for. And there's your potential short position. I know a lot of our members got this call from our trading floor, and they're currently in that trade now, which is fantastic. Pound CAD also had some, again, the market has dropped. It's gone sideways. It's a dead cat bounce. There's opportunities here on a breakout to the downside, and if we take it down to the smaller time frames like the 4-hour, for example, you can see here the market triple tops, or there's a level of resistance there. Tests at 1, 2, 3, 4. There's a lower high. There's your high test. Moving averages start moving lower. There's a potential trade in there somewhere, okay, and one that you can potentially hold on in anticipation of the market breaking these lows, okay. And if this low does get broken, then we've got a long way to go before any significant support. So these are just a couple of trades that we're holding on to, and very simply, we talked about last week how oil's potentially basing. Pound looks relatively weak still because of Brexit. Seasonals are also confirming that fundamental bias. They operate very differently, but they're saying the same thing. And we've got the technical. So there's been some really good trading opportunities on those markets. So there was also, if we look at CAD Swiss, and just going to look at some of these exotics before we go back to the majors and minors. But CAD Swiss, we talked about energy being quite bullish, and oil potentially based. And if you look on the weekly chart here, you can see that we've just come into this level of support. We put in a bullish engulfing bar at the beginning of the year. Market triggered that bullish engulfing bar, came down, tested the 50% retrace, and then low tested or put a pin bar reversal in last week. And obviously this is weekly chart trading, so not what everyone will do, but it gives you direction. It gives you momentum of where the buyers and sellers are. And a simple long position would have just been this low test bar or pin bar reversal here. And again, this is a trade that if we get another higher low in, you probably want to get into, because it's probably going to go and test these highs here as a next level of resistance. And if it breaks that, then we could go potentially further. So that is something to look at. Of course, this could roll over and come down, and this is why we risk manage on the position. But nonetheless, there's a technical and fundamental and seasonal theme lining up, and really that's really where the focus is right now. I would also look at so New Zealand dollar. We know that seasonally commodities tend to rally, but we've also got fundamentals and technicals lining up for New Zealand to come down, and we're starting to see that on some of the crosses here. You see New Zealand yen, it's putting this reversal, hasn't triggered yet. New Zealand CAD also presented a decent trading opportunity after this bearish engulfing bar here. There's an inside bar, it just broke lower. If you take it down to the 4-hour, you can see that the market has broken through this retracement of higher highs and higher lows. It broke through that support level, retested it with this bearish engulfing, and there's your trade there. So, just lining up, and this trade makes sense. Really, New Zealand dollar has been, or New Zealand has been struggling with data, and still widely expected they would cut rates at some point, and really just matching the strength against the weakness. Canadian dollar seems quite strong with a potential base in oil. So really just finding what the weakest currency is and pairing it with the strongest currency. And of course, one way to do that on your platforms, whatever you use, simply group all your currency pairs together and see which ones are all red and which ones are all green. Right now, New Zealand dollar is selling off against everything there is. And those are the ones that you want to focus on. So there's definitely room for trading opportunities and volatility in commodity-related currencies. In terms of some of the other currencies, I mean, if you look at euro dollar, for example, on the daily chart, we can see that we've just broken. We broke through this high here. The market was just going sideways, chop, nothing going on. We broke through to the upside. Had a decent move higher, and now it just looks like we're going to retrace again. Here's a one wave retracement. Generally on the long side, I like to look for the 3 waves. I like for it to just pop up, pop back down again. This would be a potential area to look for another buy signal. Just bear in mind that everyone is probably looking to buy euro at this point here, but nonetheless, that's probably where you'll be looking for some type of long entry based on the market moving higher. Okay, again, this could just be a trap for retail traders to get in before the professionals get in and sell. So again, watch the headlines on what's happening with the ECB. They've been very quiet because of all the volatility. They haven't really had to do anything. There's no point compounding the effects of what's happening in China and the overspill around the globe. But nonetheless, as that's settled down now, we're going to start hearing about those announcements a lot more. So with euro, I'll be looking for like a buy zone around this level of support here. Wouldn't necessarily trade it short up until there. It can be quite complex, some of these retracements, especially if there's no news to really push it. But if you did want to, then you can simply look at the 4 hour. Seems to be in a decent alignment to look for a short position here, as we just high tested over the last 4 hours. In terms of British pound against the US dollar, now it's interesting because if we look at the weekly charts, we have this is the first retrace in quite a while. We've just run into that level of resistance, this previous low. It came off, and now we're just stalling. It does seem quite weak, this retracement, and I personally will be looking for some type of shorting opportunity up until these lows here, just below 1.4 thousand. Now, of course, we are trading from headline to headline, and I do feel that this level here at 1.43, just 1.4360, I want to see if that level will hold or not. I do have a fear that if we came down to this low here, we could just low test or put a pin bar in, and we may just want to move a little bit higher from that. So really, I'll be watching that level. May look to get a long position on, depending on when it sets up and what else is happening, because the reward to risk will definitely stack up. It will at least to go off and take out this high, and really probably want to test these levels here, maybe the 1.5 thousand level. But if it fails, I'll be looking to get back onto the short side as well. So again, this point here, it's a turning point. It's a decision point. It's not going up. It's not going down. It's going sideways. A lot of traders are mixed on whether to buy this or to sell this. So you don't want to get in too early. Again, something like this, you want to go at a lower risk. And then once it starts moving in your favor, like here, then you can capture your retracement. So you can go in full stake because you have a confirmed trend. Far too often, people get in way too early and risk far too much at the beginning of the move. It's not confirmed. Then it starts trending, and instead of them getting in on the trend, they're reeling over their losses. So you've really got to play it safe when the market's going sideways, wait for a confirmation of the trend or the momentum, and then you want to get on board. All right. So two possible scenarios of a British pound, and you've got to try and anticipate what you're going to do if it triggers to the long side and what you're going to do if it triggers to the short side. Okay. So let's have a look at Aussie dollar against the US dollar. Now, Aussie dollar against the US dollar, just for me, so we had that 5-wave retrace. 1, 2, 3, 4, 5. And I did warn people from selling some of these highs here. Okay, you can see a lot of retail traders would have got trapped. The high test, they would have sold, you got rejected. Would have sold, got rejected. Right now we put in this big seller bar. I'm not too sure if we're going to take out this high. To be honest, I think we may be looking at this wave structure. We've come down, gone back up, and we may fail around here somewhere before we can initiate another short position lower. But again, nothing's really screaming out for that right now. Okay, so wicked chart's not really telling us a lot. It's just going sideways. So I haven't traded Aussie for a while. There's not much I would have done here, but trading it against the crosses would have been nice, like pound Oz, for example. Okay, Kiwi. So New Zealand dollar against the US dollar. There's a 200 moving average just kicking in around these highs here, actually. And right now, from a fundamental point of view, you would say the bias is to the short side. From a technical point of view, it's just going sideways. You can easily, if we take a short position here, can easily run up, take these highs and test this level before it goes short, or it could break through this resistance and start moving higher, right? Anything can happen in these markets. But whilst we're in this range, again, looking to trade at a reduced stake because it's in a range. It can go either way. There's no real momentum here. But reducing, just trading it, if you do get it set up, reduce the stake, just in anticipation it may go off and break these lows or may go off and break these highs. So again, just a little bit, I'm fairly flat on Kiwi, but this is definitely one that I'm watching over the next few months, especially with the news announcement and the data that will be coming out. If we have a look at US dollar against the Swiss franc, so we had this. So we had this retrace here. We had a nice one-to-one fib extension, 1.272 fib extension here. A nice fake out low test here as well, pin bar. Now again, where is this likely to go? Is the US dollar going to go higher? Is it still going to continue selling off? The possibility of rate hikes has really been pushed back now. So I think we've still got some dollar weakness potentially. But again, on this kind of chart, it's not really, who's winning the battle, the buyers or sellers. It's just really mixed, to be honest. It's not worth, for me personally, not worthwhile risking money on something that is really such an unknown. You want to be trading something that has an aggressive trend. Something like the dollar yen, for example. That's clearly sellers are in control here, right? So clearly sellers are in control. So we want to be selling this. Again, I'm going to wait for the right time. I may not sell it down here, but I'll wait for the market I'll sell it here on an intraday basis, maybe 4-hour, the 1-hour chart, and grab a few pips, and potentially wait for a higher low to come in, and then get the ABC, the 3-wave retrace, and look to sell it around this level here. Okay, so anywhere between 116.5 and 117, that looks like a better zone to be selling this in continuation of the momentum to the downside. But of course, what we have to remember with dollar yen is that a lot of people are still thinking that the Bank of Japan will ease and will look to come into the market and prop this up a little bit further. And we have had this 1, 2, 3, 4, 5-wave retrace, so we are due an ABC retrace higher. So again, from a weekly point of view, you would arguably say that the trend is overall still up, but the momentum right now is to the downside. Okay, so what you're finding is that with a lot of the currency pairs, they've sold off, and the question now is: are they going to continue bouncing in their higher time frames, or are they going to continue to sell off and continue the momentum? And this is why it's important to stay at lower risk during these points. And then once the trend starts moving in your favor or is more confirmed, then you can start going in your normal risk or even higher risk. Once you have more confirmations of where the momentum in the market is. Okay, but those are the levels I'll be looking to sell on dollar yen. If we look at dollar CAD, so dollar CAD, obviously, strong uptrend, but we were struggling here at the moving averages. Put this high test, it's come down a little bit. Today will be interesting to see how the US market opens and see what their take is on WTI. This could easily be a higher low for the market, moved higher again and took out this high. But I would suspect that if it takes out this high, it will probably roll over at some point and go for a deeper. It will go for a deeper retracement. This trade looks like it's done. Things don't last forever. Oil is potentially basing. Most of the volatility to happen has been self-fulfilling. You see the headlines, people start selling, that creates some momentum on the charts, and more people start selling, and it's a vicious cycle. Really, we need the fundamentals to back it up as well. There are some warning signs on how some data looks similar to the pre-recession data as well, and so the market was always due a correction. But nonetheless, you've just got to wait for the confirmations, and if you don't have the confirmations, trade carefully and just lower your size. Okay, so gold has been probably the standout performer. You can see that it was just moving sideways here, broke out here, broke out this high, came down, retested, and then that was a trade. That was a trade there. So that's really what we were looking to do. Now, potential sell areas or buy areas, sorry, would be this level of support here, and also this level of support here. So looking for some potential long positions on some of these pairs. Okay, if we look at the weekly chart, if that comes up here, so you can see it looks like we potentially broke up to the momentum is to the upside now, but we've also got to be careful as well and wait for the right timing of these trades. But definitely gold is one to be looking out for over the next week or so. All right. And some of the equities as well look quite interesting. Again, look like a potential markets have based temporarily here. So the Dow, for example. So again, just probably looking for this high to be taken out. Now, if we do get the momentum on equities to the upside, the typical correlation has been a euro to come down and obviously dollar yen to go up. So again, look for those clues from different markets in order to anticipate, where the market is going, because right now everything is at a potential turning point. All right. So just a very brief recap of what we've been going through, and the recap is that the markets are still waiting for a big theme. Fed probably not likely to act, or they're pushing their date back of a potential rate hike, considering all the volatility. Tomorrow's FOMC announcement is going to be very, very key. We've still got potential for the ECB and the Bank of Japan to do quantitative easing, and still potential for the Royal Bank of New Zealand for a potential rate cut. So those are the general themes. We've got to really kind of wait until they start developing. It doesn't matter if you missed the very beginning of the move, as long as you make some of the meat in the middle, that's perfect. All right. And again, you want to trade the move. You don't want to try to be clever. Yeah. Wait for the markets to move, wait for the confirmed momentum, and then you want to get involved. As I said before, the yen pairs and the oil will be in focus. I would also be looking at British pound based on the Brexit fears as well, and the volatility that will bring, and New Zealand dollar. From an intraday perspective, you want to wait for those daily turns and wait for the trends to resume. From an end of day focus, you want to just match the strengths and the weaknesses. And I'll be looking at potential Kiwi shorts, gold and silver longs, and focusing on the yen and the British pound, and really watching FOMC closely tomorrow. I think the market right now is just ideal for an intraday trader. For an end of day trader, you probably got to be a little bit more patient than you had been from the beginning of the year, but that's how the market moves. It moves differently from time to time. You just got to understand what the market is doing and position yourself accordingly. This is Jitan Solanki from TradeVest. I hope you enjoyed this, and I will see you next week.